Welcome back to the crypto channel, everyone. My name is Josh, and right now, Bitcoin is continuing the short-term bullish relief as the market is continuing to price in the rate cut, potentially coming in just 2 days from now. In fact, in less than 2 days from now, as of recording this video. But the price is now once again running into this exact area of resistance in the immediate short term, while we're still seeing liquidity building above the price of Bitcoin in the Bitcoin liquidation heat map, while Ethereum has just completed a perfect retest of this crucial area on the price chart, while the price of Chainlink is also doing the same here in the short term, retesting an important level on the price chart. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before taking a look at the Bitcoin and crypto charts today, we need to talk about the upcoming FOMC meeting, also known as a Fed meeting, which is happening in less than 2 days from now as of recording this video. And the pricings of the probabilities have changed at least slightly over the last 1 day. And so obviously, if you watched my last video that I posted on the channel just yesterday, you'll know that the pricings for what the market was actually expecting was basically around an 86% chance of an interest rate cut by 25 basis points, or 0.25%, and about a 14% probability of no change in interest rates. That's what the market was pricing in about 1 day ago in my last video. Whereas right now, as of recording this video, the market is currently pricing in an 89.4% chance, almost a 90% probability of that 25 basis point rate cut, and about a 10.5% chance of no change in interest rates. And so in other words, over the last 1 day or so, we've seen the market price in more of that rate cut as a higher probability. So they're continuing to price in the rate cut into the market over the last 1 day. And due to this pricing in of that rate cut, we're currently seeing a bit of short-term bullish price action, which is to be expected because fundamentally speaking, a rate cut is indeed bullish for markets. And I still see some people talk about how rate cuts are actually bearish for markets, because sometimes when the Fed has cut rates, we see some bearish price action in markets. But it's important to understand the difference between correlation and causation. And of course, it's important to understand things from first principles. So a rate cut, fundamentally what it does is lower the cost of capital. It makes it easier to borrow more and more money, which basically means more money can be printed, because every dollar that is lent is a dollar that is lent into existence. All loans basically print money. And when more money gets printed, more money gets entered into the economy, entered into markets. Of course, that's going to boost prices of basically everything. That's what we saw over the last few years in stock markets, in real estate, in goods and services. And so once again, lower interest rates help to boost prices, which are bullish for the prices of markets, of assets. But higher interest rates, of course, bring pressure on prices, bring pressure on the markets, obviously, which is why the Fed likes to increase interest rates when there's high inflation. And so fundamentally speaking, lower interest rates, which means rate cuts, are bullish for markets, but sometimes the Fed might cut rates when there's other things going on that are, of course, bearish for markets. For example, if there's a banking crisis, it's the banking crisis that would be bearish for markets, not the interest rate cuts that the Fed might be trying to do at that point in time in order to try and save the economy. And so once again, as we're seeing this interest rate cut continue to be priced into the market, as that is being priced in, that is helping to cause some bullish price action here in the short term, up until the point where it's 100% priced in. And so for as long as we still actually get the 25 basis point rate cut, which is looking likely, but for as long as that actually happens in about 2 days from now at this next Fed meeting, then between now and then, of course, we'll likely see a little bit more bullish price action in the short term for markets as this continues to be priced in. But with that being said, taking a look at the Bitcoin charts today on the weekly time frame, the super trend indicator is still sitting in the red, indicating a larger bearish trend or a larger correction in the price. And if we're taking a look at this weekly Bitcoin price chart, we technically still have this massive bearish divergence on this much larger time frame here, which is technically still active. We've not yet confirmed a proper invalidation signal to actually invalidate this larger bearish divergence. So obviously, as I've been saying pretty much every day for months now, since almost all-time highs, we're most likely going to see a period of weakness over the next couple of months or so, is what what I said back then. And obviously that's played out exactly as predicted when pretty much no one else out there was saying that. But if we're taking a look at this 3-day Bitcoin price chart in the somewhat short to mid-term, we have this new oversold signal in the 3-day Bitcoin RSI. And the last time this happened on this time frame for Bitcoin for the RSI was over 3 years ago in mid-2022. And what came next was either a sideways consolidation or a bit more of a bullish relief just over the next few weeks. So once again, this is not a super long-term signal. It's not a signal that will play out over many months or years, but maybe just for the next few weeks, it is likely we could continue a little bit more of a relief in the short term, kind of like this. And if we're taking a look at the daily Bitcoin price chart, at least for now, the price is still stuck between important support and resistance. So of course, we still have a lot of support at give or take 85,000 and a lot of resistance, especially in between around 92 to 94,000, which is an area I've warned about many times here on the channel since before. We've seen multiple perfect rejections from this exact area. But if we actually break out above around 94,000 with confirmation, so ideally a daily candle close above 94,000 and actually holding above that level, in that situation, the next target or next major point of resistance is sitting at close to 100,000. But if we're zooming into the shorter term, looking at the 6-hour time frame, we can see that next area of resistance really in between around 99 to 100,000 based on previous support flipping into new resistance. And above 100k, we also have more resistance right here in between 106,000 to 107,000. But remember, the immediate area of resistance to pay attention to is still in between around 92 to 94,000. And so remember, as we continue this short-term bullish relief, which has been playing out over the last couple of weeks, but as this especially continues leading up to the FOMC meeting or Fed meeting, especially if this interest rate cut actually happens and continues to be priced into the market, then that can cause a little bit more of a short-term bullish relief. But as this is happening, we cannot ignore resistance on the price chart, where the price is most likely going to struggle at or possibly reject from, as we've seen many times over the last couple of weeks. And we just saw it again over the last few hours, over the last 1 day or so. And so obviously that's still the major resistance to pay attention to, at least in the immediate short term. But once again, as I've explained many times over the last few days, as the price tests this resistance more and more, the weaker that resistance will actually get. And especially if we continue to form higher lows, this will basically press the price up against this resistance. And the more that happens, once again, the higher probability, the increase in chance of a potential breakout. And so at least as of right now, as of recording this video, this current price structure that we're seeing in the short term is currently looking more bullish than it is bearish, at least in the short term, once again, because it does indeed resemble a potential ascending triangle pattern with relatively horizontal highs, obviously pretty much horizontal resistance in this area in between 92 to 94,000, while we're currently seeing higher lows, which is somewhat of a ascending triangle pattern, which is of course a bullish price pattern. And if we're actually measuring out a price target based on this potentially being an ascending triangle pattern, if we confirm the breakout, that would actually set up a price target in between 106 to 107,000, exactly in this major area of resistance here. But of course, between 94 to 106,000, we also have a lot of resistance in between around 99 to 100,000 that we also cannot ignore. But remember, that potential price target for this potential ascending triangle pattern would only even confirm, it would only even come into play if we first confirm the breakout above 94,000. So that is still the immediate resistance, the immediate obstacle to pay attention to. And of course, at least for now, in the shorter term, we still have some liquidity building towards the upside. We don't have a lot immediately below the price. Obviously, if you zoom out to maybe a larger time frame, you could find some at much lower prices, but usually it's the liquidity that's relatively close to the price that is at least notable to pay attention to. And right now, that's really sitting at just above 94,000, really in between 94.2k towards around 94.6k. In that area just there, we still have a decent amount of liquidity building. And so if you haven't done so already, this is definitely the time to get set up, ready to go on a crypto exchange to take advantage of this next potential trading opportunity. As always, not financial advice, but if you use the first link below this video in the description and in the pinned comment, that first link below this video will take you to this page right here over on the Pinex crypto exchange, where you can take advantage of some major bonuses that are only available using that link. For example, if you make your account using that link and complete KYC, you get a 50 USDT bonus on your account. And on top of that, if you have deposits here, if you deposit deposit as little as $100, you get a 100 USDT bonus on your account. If you deposit 10,000, you get a $1,000 bonus onto your Pinex account. So basically a bunch of free money from the exchange, which you can then actually go ahead to use to open a Bitcoin trade or any other crypto trade if you want to over on Pinex. But once again, these bonuses right here are only available if you're using that link below the video to actually make your Pinex account. So if you're going to be trading crypto anyway or preparing to take the next trading opportunity, you might as well check it out. Once again, first link below this video. But if you want a no KYC crypto exchange to place long positions or short positions on pretty much any crypto that I also use myself, then make sure to check out the second link below this video in the description and in the pinned comment, because that second link below the video will take you to this page right here over on 2bit, where you can also take advantage of a bunch of exclusive deposit bonuses that are only available using that link. And on top of that, if you click the link below the video, it will take you to this page where you can actually take advantage of a trade protection and trader recovery fund. And so just for the next 1.5 days or so during this event that's running right now, if you're making your account during this event, you'll receive 100% loss protection on your first futures trade up to 200 USDT in trial funds. And on top of that, if you get liquidated during this event that's running right now for the next 1.5 days or so, if you get liquidated over 50 USDT during the event, you may be eligible for recovery compensation up to 1,000 USDT depending on your actual liquidation. And so once again, if you're going to be trading crypto anyway, you might as well check this out. Take advantage of this using that second link below this video. And remember, 2bit is also a no KYC exchange. But with that being said, taking a quick look at the Bitcoin dominance chart on the daily time frame, and right now we're still not really seeing a significant amount of momentum to either direction. We're kind of just bouncing around relatively sideways in the shorter term, seeing slight bullish moves and slight bearish moves. But at least for now, in the shorter term, the Bitcoin dominance is not really in a strong bearish or a strong bullish trend. And so in other words, this is telling us that a lot of the major altcoins out there on average will likely be performing quite similar to whatever Bitcoin is doing, not necessarily massively outperforming or massively underperforming. At least for now, that is still the current situation for the Bitcoin dominance. And if we're taking a look at Ethereum on the daily time frame over the last few days or so, obviously we've seen a retest of this previous resistance in the short term, now acting as new support. And so far, we're currently bouncing from this area, which is good to see, obviously, and that's sitting in between 3,000 to 3.1k, which is the area of support now that we just retested over the last few days. And so once again, so far so good. We've just seen a successful bounce from this area. So far we're holding that area as support, which is of course bullish price structure, flipping previous resistance into new support. Obviously that's great to see, and we still have a technical price target for this W pattern or double bottom pattern here, technically still active, sitting at close to 3.4k. But keep in mind, between the current price and 3.4k, we still have resistance in between 3250 to 3.3k, which is pretty much exactly where we rejected from about half a week ago. But obviously if we break past that resistance, then once again we have that 3.4k target, and then above all of that right there, if the price continues higher beyond that point, the next major resistance is in between 3.6k to 3.7k. And if we're zooming further into the short term, taking a look at the 4-hour Ethereum price chart, obviously that previous oversold signal played out very nicely, and then we hit overbought, and then that played out very nicely in the form of just a short-term cool-off here, resetting the RSI back towards more neutral. And right now the RSI is relatively neutral. Of course, it's not overbought or oversold, which means we now potentially have a little bit more room towards the upside still to go, considering the current short-term trend is simply more bullish than it is bearish. We're technically forming higher lows and higher highs, which is indeed bullish price structure, at least in the shorter term here on the smaller time frames. And if we're taking a look at the price of Solana on the 2-day time frame, right now we're still in the same sideways price range in the short term, in between this support and this resistance. First of all, this support is still sitting at around 124 to 128, and this resistance is still sitting in between around 143 to 147. And so basically continue to expect the price to bounce around this support and reject from around this resistance, remaining in this sideways price range, simply chopping around sideways for a little longer, at least over the next couple of of days, maybe up until the Fed meeting, depending on the outcome of that Fed meeting. That could potentially shake up markets in the short term, but between now and then, it's very likely Solana will remain in this sideways price range as a very high probability. And in case you're wondering what the next major targets would be if we break out of this range, first of all, if we actually broke out towards the upside, if we break above 147 with confirmation and hold above that level, in that situation, the next target or major point of resistance would be sitting in between roughly 167 to 170, give or take. And if we break below the support, below 124 with confirmation, in that situation, the next major support or major price target towards the downside will be sitting at close to $105, just above $100. But once again, at least for the next couple of days, continue to expect the price of Solana to remain in this same sideways price range, playing out choppy sideways price action. And of course, also pay attention to what Bitcoin is doing to figure out what is likely going to happen for a lot of these major altcoins here. And if we're taking a look at the price of XRP on the weekly time frame, we're technically still seeing this massive bearish divergence on the weekly time frame, which is technically still active. We've not yet confirmed any invalidation signal to properly invalidate this larger bearish divergence, which means this is still influencing the price on the much larger time frames. Remember, this is not a short-term signal. This is a signal that has already been playing out over multiple months as predicted. Of course, here on the channel around late July, early August, I predicted a multi-month pullback coming very soon as a very high probability. And so now that that has played out as predicted, of course, this is still active, which means it could continue to play out over the next multiple weeks or months. At least for now, that's still the case on the larger time frames. But if we're taking a look at the daily time frame, we do have a smaller or shorter term bullish divergence, which is also technically still active on the daily time frame, which just in the shorter term here is causing a bit of choppy sideways price action. Basically a little bit of a break, at least in the short term, from the larger bearish trend, but not necessarily confirming a reversal or an end to the larger bearish trend. Of course, it is possible we can see sideways price ranges or slight bullish reliefs during the larger bearish trend. And as for support to watch out for, of course, over the last few days, we just perfectly retested this support in between $2 to $2.05. So continue to expect a lot of support around there in the short term. And if we were to break below around $2 with confirmations, the candle closes below that level, and especially if we fail to get back above that area, in that situation, the next immediate target would be sitting at roughly $1.94 to $1.95, and below that, I'll be targeting around $1.82 based on this local low. And as for resistance, if we now see a little bit more of a short-term bounce to continue some more choppy sideways price action here, the next major resistance is sitting at close to $2.20. And if we're taking a quick look at the price of Chainlink on the daily time frame, at least for now, this shorter term bullish divergence is still currently active for the price of Chainlink, which means it's quite likely that in the coming days, maybe the next week, that sort of time frame, expect either some choppy sideways price action or a little bit more of a slight bullish relief in the short term, not necessarily confirming the end of the larger bearish trend, but at least in the shorter term, continue to expect a bit more of a relief as a likely scenario. But if we start to break out above around 15, especially above around $16, at that point, it is possible we could start to basically confirm a bit more of a reversal then out of this larger bearish trend, especially if we continue to form, let's just say, a higher low here in the price chart. But at least so far, obviously, we are holding above this previous short-term resistance, now acting as new support. Over the last few days, we have been finding a lot of support in this area in between roughly $13.40 to $13.50. So for now, that is still the support to pay attention to, which we have been testing over the last few days, and so far have been holding that as support. And while the price continues to remain above $13.40 to $13.50, once again, the bullish divergence remains active. So it's likely that maybe in the next few days, especially if we continue to price in that rate cut and ultimately see the rate cut in a couple of days from now, in that situation, we'll likely see a little bit more of a relief, potentially getting closer towards these next major points of resistance, which, by the way, is sitting at close to $15. Expect resistance at close to $15, but then especially in between around $15.20 to $15.70 as a major area to pay attention to. But overall, Chainlink, along with a lot of these major altcoins, will likely follow similar price action, not the exact same price action, but very similar price action to whatever Bitcoin is doing. So if Bitcoin continues this relief, and especially if we break out eventually, then that will likely assist a lot of these altcoins with some short-term bullish reliefs. And of course, vice versa, if Bitcoin continues to struggle in the meantime at this resistance, then continue to expect a lot of altcoins to just struggle a little bit in the short term. But once again, no matter what happens here, if you want to get set up ready to go to take the next trading opportunity, get set up ready to go using those links below the video to those exchanges if you want to claim the massive bonuses that are only available using those links. And if you want to actually know how you can trade crypto no matter what the price is doing here, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.